And it's interesting, Rav, at this point, pricing doesn't matter as much. You don't have to be on point with pricing because the market's going to adjust to its natural levels. So let's assume a property is worth $1 million. And by the way, past data doesn't matter today. So you can't really look at past data and say, oh, this empirical data suggests the value is here, because you can throw that out the window. Because if you're going to rely on that as a buyer, you're going to be snookered for sure, right? So if you've got a property for $1 million, traditional pricing model might be, well, let's list it for $1,050,000, throw a little bit of a buffer for negotiating and see what comes of that. And you have to be really bang on with pricing, because if you miss the market price, people weren't necessarily paying over ask price. Today, it really doesn't matter. You could put 800, 850, 900. We don't have to be on point on pricing as much, because the market will adjust to its natural level. And what you really want during the bidding war process is a lot of foot traffic. So during that 1 week period, you want to get as many people through the house as possible. So if you price it too high, you don't achieve that objective. So we want to go a little bit lower, but not so low where you may not get right to the top, right? So I think going to 500 to try and get to 1.2 or 1.1 is difficult. If you're 800, 850, 9, you'll get there maybe plus some, right? So what do we tell our sellers? Okay, here's what we need to do. We need to do this really quick, because right now the supply-demand quotient is in your favor. That's not a forever phenomenon. This is a brief moment in history where we're seeing this madness,